Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Not a terribly busy week for us, but definitely some really interesting topics that we'll get into today. But before we get started and dig into those, let's recap what happened this week in the markets.
Yeah, on the cattle side of the equation this week, we saw a lot of strength with live cash cattle up a little more than $3 on the week. We turned to those feeder cattle markets. They were anywhere from $2 to $8 higher this week. On the futures side, the Deese live cattle futures contract closed up $1.50, and the January feeder cattle futures contract closed up $2.15. The choice box beef price was $12 higher this week. We had strength across the board and some pretty good strength in things like ribs and chucks and loins for the week. On the pork side of the equation, cash barrel and gilt prices were down a quarter this week. The December lean hog futures contract was basically unchanged on the week. The pork cutout value lost just 90 cents this week. Bellies really led the way with some lower belly prices this week.
Really not. It's been interesting to kind of watch things move back and forth and up and down, and a fairly strong week, at least on the cattle side of things.
Yeah, just given all the uncertainty that you and I have got to talk about over much of 2020, it's nice to have maybe things just a little bit calmer, and let's hope it stays that way. There's plenty of reasons to have some issues that could return us to some volatility, but it's nice to see a little bit of less volatility these days.
After this year and on a Friday the 13th, I'll take boring any day.
Yeah, there you go.
All right, let's talk a little bit about weekly slaughter. A little bit of a decline on the hog side of things this week, and a little bit of a jump on the cattle side.
Yeah, that's right. If we look at USDA's estimated slaughter for the week ending November 14th, cattle at 653,000 head, that's up 6,000 head from where we were a week ago. While on the hog side, a weekly run here of 2.688 million head. That's actually down 25,000 head from where we were a week ago, but we're still pretty close to that 2.7 that we talk about a lot, Megan.
That magic number. And I will say too, Veterans Day holiday on Wednesday, so we did see a drop in daily slaughter totals that way. So maybe I'm making a miscorrelation, but just looking at those at a glance, maybe contributing to the decline this week.
Yeah. Given that I think we jumped back here good late in the week as well, I think that certainly points to maybe what was going on or midweek here.
We're going to talk a little bit about retail prices today. Take me through what we saw for October.
Yeah, if we look at what we got in terms of retail prices, we'll start on the beef side. The choice beef retail price for October came in at $6.35 a pound. It was actually down a couple cents from where we were in September, so we continue to see some decline in those retail prices. However, as we've been talking about for a number of months, we're still well above where we were a year ago at this time. We're up 7.8% in that October choice beef retail price relative to the 2019 level. Similarly, on the pork side, we do see the October pork retail price coming in at $4.08 a pound. That's up 4.4% from where we were a year ago at this time. We actually went up a little bit as well month to month in the pork retail price, up about 3 cents from where we said in September.
I want to talk a little bit as we head into, we're just a couple of weeks away from Thanksgiving. We're not too far from Christmas as well. Normally we see a little bit of a holiday boost in demand. Are there concerns as we see COVID cases spiking and a lot of places around the country are suggesting staying within your pod or within your house at the holiday? Does that potentially have some carryover into retail prices and demand and consumer issues as well?
I think as we've continued to see cases rise, it seems to me that we're getting more indication that we're going to see consumers maybe behave differently than would be traditional. A few weeks ago, I might have said, yeah, we were telling everyone to stay socially distanced and in their own pod, but in reality, probably folks were going to continue to behave closer to normal, especially as I still see a lot of COVID fatigue out there in terms of people tired of being cooped up all this time. However, again, I think you're right that we may see some change in behavior, especially as we've just seen such a big increase in cases here over the last couple of weeks again in many parts of the country, and maybe a lot less Thanksgiving traditional celebrations relative to what we've seen in the past.
Maybe that means we should send everybody packages of meat for Christmas and the New Year to celebrate.
There we go. I think that might be a good strategy. Nothing like a good pound of bacon in Megan's world for a gift, right?
Bacon, I mean, ham, gifts of delicious like beef and pork are always welcomed. Welcome in the Rebner or Conant household. But does it also, I mean, we talk about COVID fatigue, we talk about demand issues or concerns there. Consumer sentiment also saw a little bit of the decline.
Yeah, that's right. So we have preliminary November numbers out this week on the consumer sentiment side. A couple of things stick out. So number one, month over month, we lost about 6% in that overall index of consumer sentiment. And in fact, now we're 21% below where we were a year ago at this time. It's important to realize what's happening in those numbers. What was a 10% decline in the index of consumer expectations really drove us to that lower overall consumer sentiment number. I think we have a lot of consumers who are kind of sitting here in that uncertain mode, if you will, for a lot of reasons, COVID among them, not knowing exactly how things unfold. Federal stimulus, what do we do moving forward? I think a lot of those things are weighing on that expectation side. I remind us that none of us are great at forecasting the future, but if we were to get a vaccine out here and going as we kind of see some preliminary good news continue to come out, we could have a stronger economy as we get into 2021, and that could all spell good news for us relative to what's the worry, I think, in this release of the November consumer sentiment.
The big report for the week, Scott, is supply and demand. As we take a look at that, not a lot of revisions on the livestock side of things.
Yeah, that's right. We didn't get much at all out of USDA relative to where they were in October. Some modestly higher prices on the chicken side for 2020. But frankly, not a lot of change yet. Feed costs was the big issue that I would continue to make sure we're paying attention to, with a 40-cent increase in the 2021 corn price projected by USDA and a $20 a ton increase in soybean meal prices. Feed costs are something we need to continue to pay attention to, and it's certainly been on your and I's radar here for several weeks. And I think this WASDE just reminds us that we can go higher on feed costs.
And it might go higher yet, depending on how harvest numbers finish up.
That's correct. We got USDA that would have decreased corn production in this report by 215 million bushels. A lot of that has to do with what is a crop that's maybe not as good as we would have thought just a 3 months ago.
As we wrap up today, we're going to talk a little bit about China, and this will all kind of tie in together. We're talking about a little bit risk management as it relates to input cost. We saw in the news this morning that China finally reached out, or not finally, but reached out to presumptive President-elect Biden to congratulate him. I think that signals maybe the start of their trading relationship. Can we maybe expect a little bit more boring trading relationship as we look ahead?
So perhaps we will, and it's a little, I think, still early, but maybe a little more consistency will keep markets a little happier. I do think we have a number of issues continuing to unfold that's going to be important for us relative to China. African swine fever, you and I have talked about this for a long time, yet it hasn't gone away. And in fact, we're now maybe in the next phase of that, right? So we're talking about a China that's recovering in terms of pork production. I'm not ready to say ASF is not going to continue to be an issue, but that recovery continues, and they need less U.S. pork for their consumer side. That U.S. pork has to go somewhere, and it probably, in my book, backs up into U.S. markets. That usually gives us lower prices. I think if you look at the feed side of this equation, USDA increased corn exports 325 million bushels for the 2021 year. In this November report, I would say that's all due to China. If you're going to have more hogs in China, you're going to need more feed. Soybean meal as well, I think, is driven in large part by China. So we have things happening that both aren't good for us in the livestock side. Higher feed costs that's somewhat driven by China, and what might be some less demand for U.S. pork driven by China. Maybe the plus of this is when I look at beef trade of late, Chinese have been about 10% or so of total U.S. beef exports the last few months. Beef industry might get a nice lift as we continue into 2021 from China, as I think there's some demand that you could certainly fill there.
When we talk about this in general, knowing like we're probably not going to see 2020 exports of pork numbers, the numbers that we saw in 2020 for pork exports into China continue maybe past to 2021, so the next 3 to 5 years. How much does that come into play when we look at risk management, but also looking to build and gain and grow and reach into maybe other markets that we haven't been major players in at this point? How important does that all play together?
Yeah. So absolutely an important piece of this puzzle. And, I'll remind us that small changes in Chinese consumption or production can result in big changes in trade. They're just so big, especially when you talk about the pork side being roughly half of production and consumption in the world. So I always am cautionary when I say, well, generally, I think we're going to have less demand for pork, U.S. pork going to China because of what they're doing. Yet a little stronger consumption on their part could continue to have some growth in exports. But I think at best we're level for the next few years. And after the gains we saw in 2020, I just caution us about how much we want to grow production in this country without then new markets. I think the soybean industry learned a lot about depending too much on one market like China. And so for the pork industry, it's all of those other countries. It's why I always say we want someone like the pork board spending dollars to find new markets for U.S. pork products, new world markets for those products. Despite you don't have to take a futures contract, it's a risk management strategy. I'd much rather trade with 10 countries than one country. And so I think that's going to be part of the mission that has to get accomplished. I remind us all the time that once we start growing exports, you got to keep growing them. It's not a one and done. We all of a sudden increase production to that new demand and moderate prices. We have to continue to grow them. And so that's new markets as well that are important to that message.
Scott, that'll do it for us today as we look ahead to next week. A couple of biggies that we'll be talking about.
That's right. We'll get livestock slaughter out next Thursday, and we'll finish the week with cattle on feed report.
Sounds great. We will talk to you next Friday. Have a great weekend.
Hey, you do the same, Megan.
Our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can submit questions as well and subscribe, all of those great things. And for all of the great Brownfield podcasts, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.